Oops, sorry everyone. I think I was talking, but I was on mute. So I'm going to go ahead and start over. So welcome to our webinar today on social banking, staying human in the age of digital. I am Maya Lawrence, product marketer at Sopra Banking Software for our digital banking suite. And I will be moderating this webinar today. We are with Max Johnson and Tom Lambrecht. Max Johnson is Global Head of Business Solutions at Fedor Solutions, which is now part of Sopra Banking Software. And Tom is Country Manager for Benelux for Sopra Banking Software. So welcome, everybody. I'm just going to give you a quick agenda for today so you know what's on the way. First note is that we're going to be having some surveys throughout the webinar. So you will be asked some questions and we'd like you to answer them. It's on the right part of your screen where it says polls, and you can just go ahead and answer. We'll ask the questions orally at specific times during the webinar, and then we'll give you the answers throughout. The first thing that we're going to talk about today is catalysts to the rise of digital banking. So basically, we're going to talk about what's pushing digital banking in the market today. Then we're going to go on to give you 4 ways to maintain the human touch during this digital age. So ways that you will be able to make sure that you maintain relationships that are strong with your customers, even though a lot of things are going digital right now. We'll have a Q&A. And then we'll go into some of the takeaways. So I would like to ask our experts to go ahead and start. But just before, I'm going to give you survey question number 1, which should be appearing on the right side of your screen. So the question is, what do you consider to be the biggest driver of digital transformation? 1, influence of big tech. 2, the rise of challenger banks. 3, the need to cut costs. Or 4, rising customer expectations. So if you could write your answer, I'll go ahead and give you the answer or the results of the survey in a few minutes.
Perfect. Thank you, Maya. So like we mentioned, more and more banks are going digital. But why is that? We've seen, there's massive amounts of competition from the big tech who are really setting the scene. They have this relentless focus on the customer, and the customer is always at the center of their offering. Customers today, like everyone here, wants products instantly. We want it available everywhere, and we want it really simple to use, which basically all put that together, and you have this focus on this digital experience. So these obviously companies have massive market value, but they also have incredible customer loyalty. As you see here, 54% of the people trust the big tech company more than their bank. It makes you actually think, what if one of these big tech companies actually did launch a bank? How many people would flood to this? And maybe we'll see that with Google Plex later this year. But banks are starting to digitize, but they're at least 10 to 20, maybe even 30 years behind some of the big tech companies when it comes to technology. Where they do need to focus on digitizing, they also need to be focusing on creating an ecosystem of other products and services as well. So everyone here on this will have an iPhone or an Android or maybe an Huawei. But for me, I have an iPhone. I won't actually move to an Android or another one. And the reason for that isn't the iPhones are not the best hardware in the world, right? There's better phones out there that have bigger RAM and better specs. But what's stopping me is it's the applications, it's the iCloud, it's AirPods, it's the whole ecosystem that they built around it, which gives me too much value and also gives me way too much friction to want to move. So banks need to replicate this. You need to also increase that stickiness, but also that lifetime value to the customer. Because if you don't focus on the customer experience, then the banks are then going to become a processor. Big tech companies are going to start taking that customer experience, and the banks are just going to be this behind-the-scenes processor and becoming obsolete as the big banks will just have take over the market share. And this isn't something way in the future as well, right? This is happening right now. Look at Google, Apple, Samsung Pay, all the pays out there. All this is essentially just a better user experience on top of an existing card or payment rails, right? Which is really soaring in popularity now that COVID's hit. So banks are really in danger of becoming invisible to the customer. Now, there are some digital native and challenger banks out there, which I know which Tom will dive into now.
Thank you, Max. Indeed, so on top of the competition from the big tech companies, we are also seeing that more and more the competition is coming from challengers, such as neobanks and digital banks. So first of all, let me briefly explain the difference between a digital bank and a neobank. The digital bank is the online-only subsidiary of an established and regulated player in the banking sector. We can quote many examples like Hello Bank in Belgium, which is the digital bank of the BNP Paribas Fortis Group in Belgium. In the Netherlands, for instance, we can quote Rabo Direct of the Rabobank NL bank. And in France, we can also quote, for instance, Boursorama, which is the digital bank of the French Société Générale banking group. A neobank, on the other hand, is a bank without any physical branches and which functions independently from the traditional banks. And sometimes they are also called app-based challenger banks. And there are also plenty of examples of neobanks. I think the most well-known are Monzo in the UK. In France, we have Ma French Bank and Orange Bank. And in Germany, for instance, we have N26. So those two types of banks, digital banks and neobanks, and often they are confused, they are challenging the banks. And what we are seeing is that not only there are more and more neobanks and digital banks that arise, they are also rising in popularity. More and more people are using them, so they must do something better than the traditional bank. We think it has all to see with customer centricity. Another element that I want to share in this respect, it's input from one of the well-known industry analysts. They predict that by 2023, and that is pretty close, in 2 years already, so by 2023, they expect that 20% of the population in Europe over 14 years old will be using a digital or a neobank. If I were a traditional bank or a financial institution, these were important figures for me. So how do these digital and neobanks gain market share? Well, we think because they are substantially better than the traditional banks on a certain number of elements, and we will dive into these elements later in the session. Back to you, Max, for reason number 3.
Thanks, Tom. So more and more banks, again, are going digital, and this time as well, it's also to reduce costs. And it's not only by making these IT more efficient, but also reducing that number of physical branches as well. As you know, one of the costliest items in the business is people, and obviously the housing, that the branches as well. But people are still going to be needed. It's not just about, okay, we're going to automate all our processes. No, people are still needed for that strategic processes and tasks, not just tactical. So if we take payments, for example, you want to be able to automate the actual transaction processing, but behind the scenes on monitoring whether that is actually a fraudulent or part of some anti-money laundering scandal, that is where the people and the focus should be on. However, we also probably know that a lot of banks' compliance teams here probably could do with a lot more of efficiencies as well. But they're here. We say that by 2034 there'll be no branches. I kind of agree with that, or at least be very significantly less. And I think they'll just differ in what they're going to be offering. So they'll be probably moving towards more the big tech kind of stores. If we take that example, like Apple again, with Apple you could buy your phone, everything online, right? You don't necessarily need to go to the store. But why is there massive queues out, a lot of them around? Well, maybe it's the bigger ticket items, it's that expert advice on the products that are more expensive, and also help when things go wrong with the Genius Bar. And that should be the same for banks. Yes, by 2034, hopefully, fingers crossed, banks here will have all of the digital, all the products available on their mobile app. So actually the focus in these branches can be to move to build better relationships and helping onboarding customers to the right products. But it also should be helping customers when things don't go well. We just had COVID, lots of job losses, etc. There needs to be a focus on the customer to help them here. And not only will that help you build a brand, but also, drive customer loyalty. Now, to be able to do this, we really do need that well-oiled machine in the back end. And as you can see here, 70% of the capacity is focused on maintaining IT infrastructure. And that's not always a biggest issue. The issue here is that these core systems are often not giving banks any innovation. If you didn't launch a bank or migrate core systems within 5 or maybe 10 years, if you want to add an innovative feature, it's going to be complex, it's going to take months to go to market, and it's going to be very expensive. And therefore, you're going to be adding complexity around this very monolithic old system, which makes it even more harder to replace in the future. So banks are going through these transformations right now, and Tom's going to talk about this a little bit more.
So thanks, Max. Indeed, it is happening already. Banks are starting to improve the customer experience, their digital experience for their customer, because they have to, because they need to remain relevant for their customers and stay competitive. So let's take a look at the numbers that are mentioned on the slide. 83%, which is a large majority of the decision makers within the technology department, thinks that they are going to execute an important transformation initiative within the next 2 years. So these are figures that come from Forrester. Most of the investments will be done in front-end applications, and about 25%, so 1/4 of the banks and the European financial institutions will be increasing their front-end spend budget by more than 10%. So these are quite important numbers. So Max, if the banks are already investing today and they are already investing in digital, what is exactly the issue? Can you tell us more about that?
Of course I can. The issue is that customers now, especially after the pandemic, they want even more and everything to be digital. Even though banks are some of the most trusted institutions out there, they're losing all that trust with their clients as well. And this is across the board, across most of the banks across the world. And just offering digital products isn't enough anymore. Yes, tactical products like just payments, I keep mentioning, should be fully digital. But banks should start having that ethos of, if it's not digital, then it's not a product. And this is true for the customer side of things, but also from the employees. You've got to think, if the product is available on the app from the customer point of view, but it still needs paper.
Max, I think maybe you might have hit mute by accident, or you might also have a bandwidth problem. It looks like you're trying to figure it out.
Oops, and now Maya is out. Okay, let's move to this slide. I hope that you all hear me. Let me check in the chat.
I can hear you, Tom.
Okay.
There was one, I think, survey question that we wanted to answer just before moving on to this slide. Maybe we can do that now, and if we're lucky, maybe Max will work out the sound in the meantime. So we asked you all if you could try and classify which of the 4 catalysts of digitalization you thought was most impactful. Influence of big tech, rise of challenger banks, need to cut costs, or rising customer expectations. And I think that we should be able to see the answer. Rising customer expectations, 73% of you thought that was the biggest driver. 14% thought it was rise of challenger banks, 9% thought it was influence of big tech, and just 5% thought that it was need to cut costs. Would you agree with the answer there, Tom, that rising customer expectations is the biggest driver? Does that sound?
Yes, exactly. That was also my answer, to be honest. So yes, I fully agree with the answer of the audience. Let me check if Max has managed to have his sound back on, because if he did, I prefer that he can finish the slide before. Yeah. Max, are you still on? Back on?
I can't hear him.
Me neither. So I will continue with this slide, if you don't mind. I love the picture, by the way. So, in fact, we've come to an important crossroads, and there is clearly a battle between becoming more and more digital and, in the meantime, keep the human approach. So we all know, and all the banks are moving towards more digital, but you can't neglect the human approach. So in the development of financial services of tomorrow, we must keep the human factor in mind. And today, robotics and automation, they can already cope with a lot of manual, repetitive tasks easily, but it is only human beings that can feel or hear the sensitivity to a customer's tone, the emotional state, nuances in their language. So the feeling that something does not feel right. So machines are fast learners, especially artificial intelligence. We are not there yet, but clearly artificial intelligence is becoming smarter. So basically, the key question is, banks need to become more digital, but how can they keep the human touch and at the same time create and maintain a strong relationship with their customers and prospects? So to help you a little bit further, we have come up with 4 key ways. But I think, Maya, before we enter into these 4 ways that we see, we have prepared a second poll question, isn't it?
Yeah, we can go ahead and ask our poll question now, our second poll question. Anton, could you display that in the poll area?
I'm sorry, I need to display it in the poll area.
No, it's Anton. There we go. Okay, so Forrester has done a lot of research around emotion and fit and salience when it comes to the way that a brand has an impact on customers. So our question to you is, which do you think is the most important aspect of a brand's energy? Do you think that it's fit, salience, or emotion? So you can go ahead and record your answer, and we'll let you know what Forrester thinks the correct answer is in a couple of minutes.
All right, so I will again try to hand over to Max. As said, we have identified 4 ways where we think banks can improve, and the first suggestion is in the hands of Max.
Please say you can hear me now.
Yes.
Yeah. Sorry, well, I had to turn it off and on again, like most tech things. That seems to do the trick, right? So tip 1 or tip 0 is turn it off and on again. Tip 1 is banks need to improve the emotional connection with their customers, helping you build that digital trust and brand awareness. So how come, that social media platforms like Twitter, Facebook, and LinkedIn are so successful? Well, for an important part is that they heavily invest in stimulating their users to interact and engage with each other through plenty of ways, like the thumbs up and likes, etc. But they also provide easy to consume content, which sparks engagement as well. And the more the customers engage, you start building a profile of that customer based on their interests. Google has got this so far ingrained and done to a science that every single person has, is not segmented on groups. It's down to the individual, which is crazy. On the other hand, banks will typically just segregate, based on groups and demographic information, which we even know now that just because of our age, sex, location, job doesn't dictate what our wants and needs are. So to actually achieve this, the bank's business departments really struggle to stimulate engagement and exchanges with customers. They don't know how to build relevant content and how to start debates. They also struggle with how to, take the data that they do get from engagements and actually use that to profile certain customers, and then building a brand upon that that actually has that take your values as a company as well. And from the IT systems point of view, to actually help those business departments, they're really struggling to find that right technical solution that help these challenges, and actually how to make things easier for when they do have a solution to actually moderate these big monolithic social media that has thousands, if not millions, of customers. But I think we should start anyway of why do you want to do create these emotional connections with your customers. Well, the best thing is that it's going to, drive more value from your customers as well. So once you either use social media or even have your own platform, you want to create this emotional connection. You want to have key values and objectives, and sticking to them relentlessly will help you build this connection as well. We even see across industries, if you have an emotional connection to the customer, you will bring a higher lifetime value. And if you can couple this with giving your customer actually long-term value as well for being your customer, then you've built yourself some real loyal customers and very strong brand ambassadors as well. Maya, do we have is this where we give the answer to the survey question as well? I think people can probably guess what it is.
I think so. Wow, 100%. 100% guessed the right answer. So yes, Forrester found that emotion was the most important aspect of a brand's energy. So I guess the question then is, how do you create that emotional connection or sustain that emotional connection with your customers? And we think that one of the ways that can be done is through social banking. So I'll go ahead and let you, Max, tell us a little bit more about that.
Perfect. Yeah. So social banking, something that is quite a new and abstract concept. So the way I like to think of it is, imagine TripAdvisor, what that's done for the travel and hospitality industry, but reimagining that, but for financial services. So how you could find the best holiday, best place to eat on TripAdvisor. Social banking should enable you to be able to do that, find the right products and the right way to live your lifestyle financially. You should be able to enroll with just your email and phone number. You don't want to have this really hefty and large KYC process to onboard. And once you're on board and start engaging, you should be getting rewards for engaging on this platform, to build a rewards balance as well, and to be able to actually, once you've engaged and got these points for engaging with your customers and building these connections. And once you've done that as well, you should actually only be able to redeem these points on becoming a full KYC customer. But we'll actually go into that a little bit later on with the Feudal Bank example. So a lot of questions that we do get asked as well is, okay, well, first of all, why would customers actually engage on the social banking platform rather than the likes of Facebook? So number one, and this is a pretty big one, is it's anonymous, right? You have an email address and password and a nickname. A lot of people that are going on these platforms are asking for the likes of investment advice, maybe on one end of the spectrum, or on the other end of the spectrum, they're maybe asking for an overdraft or an extension on their loan, and maybe they've lost their job, etc. I mean, who here in this audience would actually feel comfortable by actually posting these sorts of questions on Facebook? I mean, I'm sure a few of us are, but I'm from the UK. That's really not in my DNA to do so. It's not my nature. So this is where having this type of platform really starts fostering that kind of engagement. Secondly, which we also talked about, why people would engage on this platform, is actually getting rewarded for that, earning these points that can actually be redeemed for rewards that are specific to me as well, what I want to do with them, have a wide selection that has relevant and focused content as well. So banks can build and really drive some great information about how to invest and blogs, etc. If Facebook didn't have any pictures, friends or posts, etc., no one would go to it. And it's the same for social banking as well. And lastly is, this is managed by the bank. So it's, you can have seamless customer support. So you don't have to wait in line on either going to the branch or calling up. You can have here the easy to digest and access customer support calls, and even if it's the queries can be easily managed as well. So let's dive into our real details then. Let's take a dive into the details and find out exactly what the good use cases there are from actually delivering one of these in real life, shall we say. So this is where we can move on to Feudal Bank. Feudal Bank began in 2010 in the midst of a global financial crisis, which you probably might remember. The last thing people wanted, or the German people wanted during that time frame, was another bank. But this one was different in a number of ways. One, it was completely digital. There was no branches, and this was the first in Europe as well, which Tom mentioned before about the challenger banks. But also, we actually started with a social banking community platform as well, whilst actually getting the banking license. And this is where we can actually listen to the people and understand what they didn't like during that financial crisis and what they wanted to do better for this bank. So we listened to them and we gave the customers a voice. And that wasn't just at the beginning. This is throughout the lifetime of Friedel Bank. We've managed to implement thousands of product suggestions implemented, which customers feel like they've got a voice. They've seen the roadmap of the bank and their products and solutions that they've been taking up on, and that's really increased the Net Promoter Score, which is consistently in the over 70 as well. So one of the examples as well, another way the customers felt like they had a voice was actually around at the beginning. Friedel Bank offered free ATM withdrawals across for everyone, no matter how much. And within Germany, cash was king, and still is. So this was a big drawer. But it came to a point actually where, they was actually breaking our business case. So what we had to do, our CEO at the time actually went onto the platform and put a public post and said, hey, this is breaking our business case. We actually do need to start charging for these products. But here's an option we've come up with, 3 areas. We can either have 5 free withdrawals, and it's then €1 per one, and then a mixture of the two. So we have a free withdrawals and €1.5, and I think it was one free withdrawal and then €5 per withdrawal after that. Anyway, that's not that's too in the details, but essentially what happened was the community decided they thought it was fair around the 3 free withdrawals, and actually, even though they lost a lot of value in terms of the unlimited free withdrawals of cash on the ATMs, they actually the end result was actually the NPS went up because they actually felt listened to. They actually felt that the bank cared about them. It wasn't just a T&Cs change in the background that was automatically accepted, which is again another something that's going on in the German market right now. But anyway, that was one of the key differentiators. And just lastly, actually combining the community with the rewards and actually a seamless onboarding that you can do from anywhere actually reduce the customer acquisition cost by over 90%. And also the customer support cost as well is drastically just a fraction of what it would be for a traditional bank as well, because you even have the likes of experts and FAQs that are not actually, that are taking costs away from the customer support as well. Now, anyway, I'll hand over to Tom now to discuss our next tip, but please write any questions and I can answer these later at the end of the session.
Thank you very much, Max. That was a very interesting first idea. Let's move over to the second idea that we want to share with you, is that the important element that banks need to understand their customers. You need to understand your customers by knowing their interests, knowing in which life moment they are, etc., with the ultimate aim to offer the right product at the right time, at the right price. Easily said, but a bit more difficult to realize. And banks, they need to know more than just the demographic information, than just sending us a nice digital card when it is our birthday. So banks, they possess a lot of data about their customers. They collect them through different channels, whether it's the mobile app, the internet banking, through their branches, whatever. But they often lack the capacity to bring all this information together from multiple channels and to make that information actionable. And I will quote some examples, not really examples from the banking industry, but just to give you the taste of what we are targeting. Everybody knows the Google search engine. I use Google because everybody knows it and it's easy to understand. So based upon what Google knows about me and what Google knows about you, we will get to see different search results depending on our profile, even if we type the exact same keywords when we launch our research. You might be looking for quality, for instance, where I will always pick the cheapest one. And Google will know that, and they will suggest different things depending on what they know about us. Another nice example is Spotify in the music industry. So Spotify did not create new music, and so they did not invent a new thing, but they allowed you to create your music list. And based upon what they know about me, they suggest me new songs based upon the songs that I regularly play, and they are pretty accurate in the new songs that they suggest me. I like them. I took a Spotify subscription and I'm thrilled about it. So banks and financial institutions, they face the same challenge. They have the capacity, they have the data, but they need to make it actionable. So from a business perspective, as a bank, you must see that you are not going to be perceived as an old legacy bank that does not understand the personal needs of me, an individual customer, and what I want now. Of course, translating that business requirement into an IT perspective is also not easy. So you need to be able to interrogate large amounts of data. And of course, you should have a kind of IT system allowing a smooth and flexible onboarding depending on the client segment and product. So let's move to the next slide where we can see some interesting statistics, again, from some leading industry analysts. What are these insights telling us? And so 85% of the banks and financial institutions has an ambition to leverage customer behavioral insight, which is an important part of the banks. Another interesting element is that 80% of your customers, they are willing to share their data if they understand the clear advantage that they have in doing so. And I will quote in the next slide a nice example of a Belgian bank doing something like that. And the last insight is especially interesting for your marketing and sales expenditure. If you leverage personalized data, your investment is 8 to 10 times less, 8 to 10 times more efficient if you are able to personalize it. So let's move to a nice example. It's an example of a bank in Belgium, and it's a collaboration between Argenta and Cake. Argenta is typically a mid-sized bank in Belgium, so they are not a tier one bank. So also the key message is you don't need to be a tier one bank to launch these kind of initiatives. And Cake is a third-party payment provider, basically making use of the PSD2 data aggregation possibilities. And Argenta and Cake, they have formed a partnership in the Belgian territory. So where is the advantage? So the advantage first for the Argenta customer. The Argenta customer in the native mobile app of Argenta has access to the Cake advantages. And one of the key advantages is that he will receive cashbacks, being small cash payments that are credited on the account of the customer if he buys or acquires a good or a service from one of the Cake partners. So for Argenta customers, there is a clear advantage in subscribing to the Cake service. Argenta as a bank and Cake as a TPP, they gain valuable insights in payment information from their customers and also where their customers hold other bank accounts, etc., etc. So the key message for you, Mr. Banker, is that if your customers understand and see the clear value of sharing personal data, they will do it and they will make use of it. Back over to you, Max, for tip number 3.
Thanks, Tom. So yes, tip number 3, becoming digital first. What do we mean by this? This is, having the need to create these personalized customer journeys. Hopefully you've taken our first two tips on and you know a lot about your customer now, but now you need to use this as your competitive advantage, using these insights that you've gained from the emotional connections and understanding of your customer to build the right experience for the right customer. Again, and you need to go by the ethos I mentioned before. If it's not digital, it's not a product. So, and when speaking to banks on becoming digital as well. These challenges that they're facing, and hopefully that you're facing, or maybe hopefully I'm resonating with you when I say that. You'll have the one-size-fits-all customer journeys, which a lot of customers are not satisfied by. It reduces their engagement and drop-off rates, and essentially that leads to low sales conversions and a high digital marketing spend and a higher cost of sale. And then if I talk to the IT teams as well about, hey, what about this, building the right kind of platforms, there's complexity of legacy systems and integration, which makes it very hard, for banks to meet this digital native and offer the seamless customer experience. There's constant changes all the time based on maybe regulation or just different customer UI tips and tricks. And that's actually having the right skills in place to actually build these processes as well. So banks often stop and think, well, is it worthwhile me creating these personalized journeys? So I just think that there's a lot of questions coming through. Last time, okay, it's not that you can't hear me. So just double checking, that's good. So is it worth these banks creating these personalized journeys? Well, the short answer is yes, definitely. By offering these personalized journeys, banks can increase their revenue. This is due to the reducing that friction of onboarding customers and also recommending the right products, again, to the right customer at the right time. If I go back to my Apple example, people are paying a premium, not even for the best hardware. The iPhone is not the best in terms of specifications for a phone, but it's the customer experience around which people are willing to pay more for. So I really want to discuss now is an example about how we designed a new digital customer experience to target a new customer segment for one of our clients. So this was for Abu Dhabi Islamic Bank. So that's a bank here in the United Arab Emirates. So what was their problem? Their problem was that they had a really aging demographic. I mean, this is all locals as well. And if you've ever been to the UAE, you would know that it's the majority of expats that live there. So if they wanted to be relevant in the next 20, 30,
It looks like we might have lost Max.
Yes, and this time completely, because he disappeared from the screen.
He disappeared into thin air there. Oh, maybe he's back. Okay, there he is. All right.
Can you hear me?
Yeah, you're back on.
Yeah. Thank you, everyone. I think I got to what the problem was for Adib. So I was mentioning the aging demographic, and if they want to be relevant in 20 to 30, 40 years time, that they really had to focus on the younger generation, which they wanted to focus on the Gen Y customers. And it was one of the reasons actually why they reached out to us at Fedor. And it wasn't just that, hey, look, we want the software. It's actually they wanted a partner. They wanted someone to actually upskill their team in digital products and mindsets and agile methodologies, and how to hook these new Gen Y customers into this bank. So we helped them build these customer journeys, the UX prototypes, the business plan, to have a laser focus on this new customer segment. We call these kind of projects inceptions, which was about 5-6 weeks long. And at the end of the inception, a really quick decision was made, yes, we definitely want to go ahead with this. It makes sense. And Adib built this digital sub-brand called Smart Banking, which is a neobank. Now, some of the highlights of Smart Banking is that it's onboarded over 100,000 community members. And actually, I think this is actually nearing now 200,000 as I speak. And around a third of these are actually being converted. Can you hear me now? Sorry. Around a third of these have been converted, which actually makes it one of the cheapest branches of their network as well. So these customers are not only just the traditional, the locals. These are expats, and they're from all over the United Arab Emirates, from Dubai, Sharjah, Ras Al Khaimah, and they're actually younger as well. So we're onboarding significantly new and different members to their customer base. And
I think we lost Max again. Hopefully he'll be back in a second, just like last time. But maybe Tom, we should move on to the next next tip, and then Max can continue when he gets back.
Can finish off if necessary. So I move to the next slide. So tip number 4. So here it is about embracing as a bank a partnership approach, because in the era of digital and open banking, no bank can do it alone. Even if you are a European tier 1 bank, very large bank, a bank with a very large footprint, you can't do it all by yourself. And so you need to make sure that you have a kind of connected customer experiences, and that you blend the human and the digital interface together. So it is our sincere conviction that the new business model will only succeed in a collaborative mode and when partnerships are strong. So again, from a business perspective, your challenges are that you need to find attractive services that you can add into your portfolio, and allowing your customers to experience and taste services coming from partners. And these additional services that you suggest to your customers, they do not have to be necessarily banking services. And you can also try to apply a kind of trial and error approach. If a use case is not successful, well, just kill it and try another one. Again, easily said from a business perspective, not that easy to realize within the IT department. So from an IT perspective, your challenges are that you need to provide a kind of technical solution, facilitating a kind of marketplace approach so that you can meet the challenges of your business. And ideally, of course, a fast time to market for the onboarding of these partnership services. The examples that you can see on this slide are examples of Bank of America with payment services and Bank of Montreal. I will give you another example that I know better. It's on the next slide. It's again for an example of a Belgian bank, being KBC. So KBC is a tier 1 bank in Belgium. And as a retail customer from KBC, you of course have a mobile app, and in that mobile app I can do the general stuff. Of course, I can consult my current account, my saving account, how long my mortgage is still running, etc., etc. But what KBC has done is, in the mobile app, as a customer of KBC, you have access to more than 30 non-banking services, and they are available in your banking app. The examples that I can quote in this context is that you can easily buy a ticket for public transport, for a train or a bus. You can easily rent an electric bike or step if you want to travel your way through Brussels. I can easily pay a public parking. I register my car plate in the mobile app, and when I enter a parking of one of the participating parking operators, the barrier opens automatically. My session is started. When I exit the parking, the barrier opens automatically again, and my parking session has ended. Other examples are, I can easily buy a ticket to go to the movies. I have access to a digital vault. And also recently, and here you see that they have the ability to realize a fast time to market. If I want, I have access to my COVID-19 vaccination program, and I can easily consult if I already had a first vaccine, or if I already had a second vaccine, and that I am corona-proof to travel through Europe. Another very interesting element, and to my knowledge, KBC is one of the very few banks in Europe that has these kind of features. Let me drink, so sorry. So, sorry about that. Also, as a non-banking customer of KBC, you can download the mobile app and use some of these services. So, I repeat, you don't need to be a customer, you don't need to hold an account, you don't need to hold a credit card at KBC to use their mobile app. One of the non-financial services that they have embedded in their app is Goal Alert. Goal Alert is very simple. As if you are registered, you receive an automatic alert message when your favorite football team scores a goal. It is a very simple service and it has nothing to do with financial services. But what KBC has seen, and they were amazed to see it, is how many retail customers not holding an account at KBC downloaded their mobile app just for the only purpose of this Goal Alert. So here you see that KBC as a label has the possibility to install their label, their culture into the mindset of a lot of people by offering services to a wide range of people, and it does not have to be financial services. So I think it was very interesting example. So Maya, I think we have come to the Q&A part, or I hope that Max is back online, that he can finish his story.
Yes, I think Max is back. And we have come to the Q&A indeed, and we do have some questions that have come in. So I'll go ahead and let you guys know what the questions are, and then Max or Tom, you can take them depending on who you think has the best ability to answer. So the first question is, what products and services did you build for Adib to target Gen Y?
Yeah, I think that one's probably best for me. So thank you for the question. So yeah, that was a tough one. One was going through the inception to work out exactly what the focus was. But what we came up with and what's working really well is the social banking platform, which is similar to Feudal Bank Community, is just going very strong. The ability to be able to post and have these debates and engagement has been really great with the Gen Y, and being able to share the different types of ways of saving, investing, etc., and sending money home with a lot of expats. Also, one of the ways that we were able to kind of get people on board onto the platform as well is doing an onboarding via like an Uber-like delivery service. So because there's a lot of regulations in UAE, which I won't bore you with, but essentially you still need to do the face-to-face, but we managed to get around this by actually having a delivery driver act as like someone at a branch that could actually do the ID legitimation, so looking of the ID documents, and at the same time give over their card and have an active account there and then. So that's at home or in the office, striving that need for the Gen Y to be able to have that instant gratification. I want it now. I want it delivered to my doorstep. And then also being the UAE as well is actually having a wide range of Sharia compliant products, including the community platform and the rewards that they get from that. That's essentially in a kind of off the top of my head in a nutshell of how we've driven a lot of the Gen Y customers to the platform, and the fact that it's all digital as well definitely helps.
Okay, great. Thank you, Max. There was a question in the chat that you guys were able to answer. You wrote the answer, but I thought it was pretty interesting, so I just wanted to bring it up again in case you had some supplementary information. So the question was, how do you make sure you don't invade user privacy? And I thought this was a really interesting question, particularly in this day and age when we have, things like the Cambridge Analytica scandal and big tech kind of being accused of invading the privacy of users. How can banks make sure that they don't kind of go down that same path, but that they are able to use the user data in order to make their lives better?
Well, I can take for sure the first part of the response, but I think there are many ways. The most easy thing to do is simply to send a survey to your customers or to a segment of your customers, and you can ask very direct and explicit questions to get to know their interest, and especially if you mention the benefit that they will receive if they share some of these data. So that is already a first thing that you can do. You can try to launch a survey directly to your customers. You can also make use of your branches if you are a large bank. So digital and neobanks, they don't have physical branches, but often sometimes in small communities, there are still branches and you can use your agents that work in the branches sometimes still to collect information. Another means is there are information aggregators on the market. I know very well the Benelux region, and one example that I can quote is a company, NG Data. So they collect information from what you as an individual publish on Twitter, on LinkedIn, on Facebook, whatsoever, and they are able to link that with the profiles if you are a customer of that bank. Of course, everything happens in line with the GDPR regulations. I'm not a specialist on that topic, but I know that some of the Belgian banks use these kind of information aggregators to make sure they have the right information. They know about the interest. They know about where do my customers put their money, what do they do to have fun, etc., etc. So these are at least already 3 ways of trying to obtain that kind of information. I don't know, Max, if you want to complement something.
Just a couple of things. I know you mentioned Cake before, Tom, in one of your examples. Is the way they get around this. Their whole business case is essentially we'll manage all your payments very seamlessly, but then we take that information and give you rewards. But we take your information and we send it to third parties, which you may be thinking, how is anyone subscribing to this? Well, actually what they do is they don't send like Max has spent X amount on Apple, he keeps on talking about it. No, what they do is that they club all this information together, anonymize it so you can't be personally identified, and then send it to third party data that want this information. So that's one way, is actually not, if you are selling that data, is to anonymize it. And secondly is, I think I linked it on the chat as well, is if you are tracking and tagging and personalizing these customers based on interest, is you've got to make it accessible to the customer and let them know up front about exactly what tags they have. So if you go to Google, the My Activity, and it's one of the sidebars, and you actually see everything that you've done from YouTube to Google searching to everywhere is actually tagged in, on what your interests are. But you can turn this off, right? So I actually figured out about this, and I turned it all off, so I don't get personalized ads anymore. But that's the option you need to give to your customers, right? You can track this information, you can tell them how great the benefits are, but you also then need to give them the option to be like, great, I know how beneficial this could be to me, but I just don't feel comfortable in it. So yeah, those are my 2 points on that.
Okay. I think we have time for one more question. And that one is, we talked a little bit about how, how this works in general, but are there any regional differences when it comes to social banking, how it's been perceived or accepted or appreciated in different regions, different countries in Europe, or maybe North Africa versus the Middle East? Do Tom and Max, you have anything to say about that point?
Yeah, I can start this one off, and yeah, it's definitely. The platform can stay the same, but the way you moderate and the types of discussions and the ways you can facilitate and the way it can be used would be different. So, I would liken this to the likes of Facebook, right? I mean, the platform's the same across the world, but the way it's been used in like you mentioned, in Africa compared to Europe would be drastically different as well. Whereas some features and functionality wouldn't be available in some regions. So without going into too much details, yeah, it's the platform is definitely and the concept definitely works, but you need to know who you're targeting and know how you want them to engage on that platform. So
yeah, I fully agree. I think it's a matter of think global, act local. The platform can be the same everywhere, but perhaps the talk of the town can be different. In France, at one day or in a certain period, there can be a lot of buzz about the upcoming presidential elections, whereas, for instance, in the Netherlands or in Denmark, it is not even a hot topic. So, indeed, I would say think global, but act local on this matter.
Okay, great. Thank you. There are a couple other questions in the chat. If we didn't get to your questions, then we'll be sure to answer them via email. And of course, you can always contact us if you have any questions after. And I guess we'll go on to our takeaway slide so that we kind of summarize what we talked about here today. So I think the main takeaways that we have, the first one is really to kind of use humanity and personalization in order to build trust and to drive growth. So we saw that if that's done well, then personalization in baking can help lead to a 10% annual uplift. And we saw the examples of Feeder Bank and of Adib, and they're really, once they're able to kind of get that expert advice and understand how it works to use personalization of their products and services to build that trust and build those relationships and keep those relationships with customers. The second takeaway I think that we can talk about is keeping the human touch doesn't necessarily mean that you have to have branches everywhere and that you have to physically interact with customers. It basically just means that you have to engage, you have to be empathetic, you have to make sure that you count their emotions and keep that in mind when you create products and services. And it's really more about engagement and empathy, and not being too robotic about everything than it is about actually having those physical interactions. So in this day and age, we definitely see that there are other ways that you can engage with customers. And the last takeaway is making sure that you blend the digital and human aspects of things. So maybe it means that you do keep a couple of branches, but you also really work and focus on that digital engagement that you can kind of help create through aspects like social banking. But it doesn't mean that there has to be one or that it has to be the other. It's really about merging the two and taking the best from both worlds. That's all I've got to say. Thank you so much, Tom and Max, for joining us today and sharing your knowledge, your expert knowledge with us. Like I said, if you have any questions, you can send us a message. You can get the contact information in the email that we sent in the invitation. And we will be sending a replay of this session. So if you want to dig into the slides a little bit more, or you want to send it to someone who might not have been able to join us today, then you'll be able to do that. So thank you everyone for joining us, and have a great rest of the day.
Thank you everyone.
Bye.
Thanks Maya. Thanks Tom.
Have a nice afternoon, everybody. Bye-bye.